Next up, our third session titled Venture Investing, Future Trends and the Impact of AI and the Changing World Order.
Yes, so let's give a round of applause to our speakers. First up, we have Tanuja Rajah from M Venture Partners. Next, we have Christopher Quek from TRIVE Venture Capital. Up next, we have Koichi Saito from KK Fund. And last but not least, Yuan Fang from BAce Capital. And also, let's welcome our moderator for this session, Wilson Tan from Oakleaf.
Hello. Okay. Good afternoon, everyone. While we are excited about AI and the latest iPhone model, do you ever wonder what this rapid change will bring in the next 10 years? The rise of AI, increasing automation, as well as non-tech issues such as food security, aging population, and ESG. So what is our future going to be? Today, we are honored to have our panel members to be here to speak with us about venture investing. So during the session, we will have 3 topics: the future trend, globally as well as Malaysia, the initiative like KL20, and lastly, perhaps more relevant to the audience today, what do you think when it comes to investing? So we go straight to the first question to Christopher. When we speak about the future, we are always surrounded by the news on tech and AI. But many people are talking about AI after the ChatGPT explosive rise. However, there is a gray area where it is in fact just automation. For instance, Microsoft Excel's macro that existed 15 years ago. So what does AI really mean to you, and how do you view investing in AI?
Let's test this. Testing. Does this work?
This is recording.
Oh, it's recording. Okay, as you realize, I may not be. And let's test this out. Does this on? Okay, yes, a very good afternoon to everybody. As you can realize that I did not know this was a recorder. It's not a microphone. Okay, so a very good afternoon to you, everybody. Just allow me to give a 1-minute introduction of myself. I'm the managing partner of TRIVE Venture Capital. We are an early stage venture capital that focuses on impact investing. We focus on investing in tech companies that exhibit positive impact in social, health, and wealth across Southeast Asia. To date, we have already deployed about close to $40 million across 24 kind of technology companies. A little bit about myself. I am a 3rd generation serial entrepreneur, born and raised in Southeast Asia. And fun fact, I did my first startup here in KL. I currently also sit on the board of 5 Series A to C companies. So what you're going to get on my opinions will be from the aspect of an operator VC and as well as a financial VC. Okay, so when you talk about the house views of AI, do you feel there's an echo around here? Okay, sorry. In the views of AI, I still really believe that it's a rotational sector play that's ongoing at this time. You know, when you had 2015, 2016, it was blockchain, you had the food technologies, then impact came about, and then healthcare technologies came during COVID. And then where is AI today? I think it got excited because of the whole, the whole layer, application protocol layer of ChatGPT. And in reality, yes, in the last few months, we have seen really a bit of a jump of the number of startups that will say, we are an AI company. But when you actually go deeper into it, what exactly is the technology of the AI? It may not be really an AI company per se. So to me, I just feel that it's a thematic play at this point in the financial markets, in the financial world, that they just want to get a premium on a certain valuation on that financial asset at this point. Will it, of course, be helping society in general? Yes, I do believe in it. But at this current standpoint in venture capital, do we really think that there should be a premium or a value in this having AI as part of your startup? That remains to be seen. Okay.
Okay, thank you, Christopher. We move on to the next question. We are entering into a very different world today with AI. So where do you see the trend or opportunity moving forward within the next 3 to 5 years? This one I ask Ms. Yuan.
Yeah, okay, so maybe very quick introduction about myself and my fund. I'm from BAce Capital. So for those of you who haven't heard, we're a fund. We have China background, as you can see, but we're 100% focusing investing in Southeast Asia and India. I myself also spent half time in China, half time in Southeast Asia. Previously, I started my career with investment banking and then joined Alibaba doing e-commerce for like 4 years, covering Southeast Asia as well as Greater China. Since 2020, I joined VC and started investment. Okay, so for that question, I think there are two trends which everyone think is pretty certain. One is the AI, and the other is because of the geopolitical intention, the rise of China and China startups, China companies increasingly expanding to Southeast Asia. So my take on this, probably I will address first one about China first. I think nowadays it's become not an option, but a must for China companies to go overseas. So you guys probably see increasingly more China companies doing investment overseas, as well as more China manufacturers, supply chains moving abroad. Southeast Asia is one of the most preferred area in terms of the destination. So one example will be, nowadays China actually overtaken Japan to be the most car exporting country in the world. So a lot of Southeast Asia founders asking me, so what we do? Are they very strong competitors? Will that be a big challenge? But I think my view is that this is actually very good opportunities for local founders. So I give you two examples. When I mentioned EV vehicles on the roads, more China vehicles in Southeast Asia, many of them think that's a threat. But one of the startups I met recently, very interestingly, they are actually trying to collaborate with these China car manufacturers because obviously trying to sell EV vehicles on the road is the first thing, but it's also a big challenge trying to address the aftermarket for those EV vehicles. For example, charging service, financial leasing for batteries, insurance, as well as maintenance, replacement of certain parts. So for that part, it's actually a very hyper-local business. So you will need to establish a very wide network. You will need to have some talents to be trained for that. So these companies, previously, they operate many car workshops. They are trying to connect with those China manufacturers to collaborate with them to utilize their existing car workshop facilities and also to train their staff to be able to service those EV vehicles. So that's one of the potential opportunities. The other example is I'm seeing more and more Southeast Asia startups trying to go to China to optimize their supply chain. So previously, I guess, those China manufacturers, they are not that keen. But nowadays, I think they are very, very open-minded and welcome. So one of the B2B construction B2B marketplace founders recently found me. So I think we caught up about 1 year ago. So back then, when they source 100% from Indonesia, I think their gross margin for B2B is single digit. But this time when they catch up with me, they're very excited. They said, okay, our gross margin has been improved to 15%. I was like, how do you do that? He said, well, we went back to, we go to China, attend a few expo, find some good suppliers. We managed to, replace some existing supplies from China. So I think, this is definitely a good trend. So, if there's any way to optimize your supply chain, you should, local founders should definitely do that. So that's about the China part. So second part about AI, I think, Chris already elaborated a lot. So I think one takeaway I have is, I think most of the startup founders in Southeast Asia probably not going to have the luxury to, build a GPT-4 equivalent LLM or doing anything very disruptive, because that needs a lot of capital. But I think one thing which is very important for both startup founders as well as investors like us is to really keep up with the AI evolution. I think for now, there's still a lot of uncertainties. Everything is evolving every day. But you should definitely keep an eye on what's going on. And then, how does that relevant to your existing business? For example, how can that create value for your existing, let's say, clients? And as well as, whether AI can help you as an operator to, save costs, being more cost efficient in your operation.
Okay, thank you for the sharing. So with the current trend in the global landscape within the Malaysia context, what do you think are the most promising area used for the AI in startup venture? How can startup identify opportunity for integrating AI in their business model? So Ms. Tanuja, you can take up. Yep.
Thank you. Since everybody has introduced themselves, I think it's best I do a 1-minute pitch as well. My name is Tanuja. I'm one of the partners at Venture Partners. We are based in Singapore, but investing across Southeast Asia and India, but at the very, very early stage of a founder's journey. So we invest when the company sometimes hasn't even launched, there's zero revenue, there's a deck and a team, so pre-seed, seed, essentially. The question was, how can companies integrate AI? Is that right?
Yep.
I mean, I could go on and on about this, but to Chris's point earlier, I think we are seeing so many startups slap the words AI or the alphabets AI on their pitch deck because they think it's something that VCs want to see. They think they can command a higher valuation. They think it's the way to go. But we obviously know which ones are just marketing and which ones are truly using AI, right? And I would urge founders to really think about whether they need to do this right now to serve their clients. I mean, no matter what company we are evaluating, we always look at the fundamentals. Obviously, is team, do you have the right capabilities and skill sets to execute this? Is the market opportunity large enough? How are you going to capture your clients? What's your business model? All of these things are equally important no matter what you're building and in what sector you're operating in. I think when it comes to AI specifically, one of the things that we look into more deeply is obviously the data that you're using, right? Data is like oil, but unrefined oil is less valuable than refined oil, and the same thing goes for data. You have crappy inputs, you have less sophisticated inputs, you have less sophisticated outputs. And so I think this is something that we look at very closely when we are evaluating companies. I mean, is this proprietary data? Where are you getting it from? How long will you have access to it? Can you continue having access to this data? If it's obviously public information and data that you're using, then you have less of a moat, right? So how you should integrate AI, I think you should ask yourself if you should and how you should do that.
Okay, thank you. So if we take a step back, there are we're talking about future trends. So there are trends beyond tech, such as food security, aging population and environment, and also ESG. So what are your thoughts on all these? With regards to VC, will you be investing in this area, even though the return may take a little bit longer compared to AI related? To Mr. Saito-san.
Hi, my name is Koichi Saito, the founder of the KK Fund. So yes, briefly introduction. So KK Fund, we are based in Singapore, and we are investing in early stage startups across Southeast Asia. So we made a couple of investments already in Malaysia, including Cafe, Policy Street, Lorry.com, and 3 to 4 more. Your question, yeah, right. ESG sort of stuff, right? Yeah, we are not actually driven by these kind of trends and buzzword, and we see more and more opportunities in still digitalization. I mean, of the offline business. My idea has not been changed since a few years ago. A lot of offline, digitalization and happening in the city side right now. But in the future, I see more opportunities in the countryside. So in the countryside, I think 100%, all of us having a mobile, but no digitalization yet in the countryside. So for us, the key word is digitalization plus countryside. So again, right? So because of the ESG or the sort of stuff, we are working for LP, so we have to give the return as soon as possible for them. So our LPs are not expecting us to wait for the return. So again, we are not swayed by these kind of buzzword. Yeah.
Okay, thank you. So now we take a step to Malaysia. So Malaysia have been talking about Penjana Capital and the recently KL20. And also, actually, we do have this called National Entrepreneur Plan to 2030. So back to Christopher, what's your view on this?
So I think first of all, to share with you guys, it's been 25 years since I did my first startup in KL. And, it's like a full circle for me to come back to KL and to see a whole new generation of new founders, new thoughts. And there's only one thing that remains the same, the tenacity of Malaysian founders. Year by year, survivors, no grants needed, fight all the way to make money for themselves, their families, and for all their employees. And I felt that when I saw the KL20, it was my team members that turned up. I wasn't around. But what they shared with me was this whole new awakening in the Malaysian founders market. Not specifically Malaysia as a market. It's a good test bed. It's a good place where you are seeing now a lot of openness by the state government, federal government, that is trying to use Malaysia as a test bed for a lot of the startup ideas. And I find it is a very interesting thing in comparison to Singapore. The Singaporean Sovereign Wealth Fund, Temasek, has started to withdraw from doing early stage investments. They screwed up big time over 2018 to COVID, when cheap debt, they overly invested, and now they have pulled back. And we thought there's going to be a gap. There won't be any more early stage funding. And I think when we saw this whole KL20, this movement, it speaks of an encouraging sign. Are we going to foresee a new generation of Malaysian entrepreneurs? In fact, our conviction was so strong that we have decided to move 50% of our team members over to KL. We have also built a new team here. And for us, because we've been 16 years in the startup ecosystem across Southeast Asia, me and my managing partner, we advised over 3,000 startups in the last 10 years. And taking that kind of experience and knowledge, if we team together with a very tenacious founder and drag this founder across Southeast Asia, I feel that there could be very interesting, great potential. But I would like to put back to the point on ESG as a thematic. One more thing that I wanted to share about why TRIVE went towards impact investing. We saw this conviction in the next generation of business owners of Southeast Asia. Now, when you look at Southeast Asia, 92% of all businesses are family run. And the rich kids have actually taken over. They're very poor thing. They have gone overseas to study, had the great life, but they're now being dragged back by their parents to take over the business and run it. And interestingly, you are seeing this next gen saying, I don't want to do the same old like what my parents did. I don't like the way that my parents has a manufacturing plant that's doing a lot of pollution. I want a kind of innovation, new technologies. And I feel that this is a partnership that startup founders can actually start working with. I think I'm just going to stop there. I could continue on all that, but I hope that just opens a little bit more conversation for my other speakers.
Ms. Tanuja, care to weigh in on your KL20 as well, since you are one of the 10 VC?
Sure, happy to. I think KL20 was a great event. It's a great initiative by the government, and it's about time that Malaysia takes its stage on the global entrepreneurship stage. But we've been investing in Malaysia for a long time, and for those of you who don't know, I am Malaysian, so it is kind of like a homecoming. I was a founder here myself as well, not as many years ago. Chris, you look amazing for your age if you started your company 25 years ago.
So if anybody can start forming anti-aging creams, skincare, I'll be your first customer. But I'm currently using Kiehl's, so if you all need to do, and cheap Korean face masks.
I mean, he must have started it when he was like 10 years old, right? I started my company 13 years ago in Malaysia and then was part of Magic running their Global Accelerator program. So I have worked with literally hundreds of founders in Malaysia. And I can agree full-heartedly with what Chris mentioned. The Malaysian founder is a tenacious one. Is that the word you use? I mean, I think it's because historically speaking, Malaysian founders have struggled to raise capital. Not a lot of VCs were looking at this country. They felt that it's a small market. I'd rather put my money in Singapore, Indonesia. And so the Malaysian founder has had to stretch the dollar, stretch the ringgit, and focus on good unit economics from day one. So I'm really excited to see what now happens because you have that characteristics instilled. Hopefully that doesn't change with more money coming into Malaysia. But now that more money is coming into Malaysia, what can we do with these amazing entrepreneurs? Where can we help them go? How can we help them scale? So I'm really quite excited to see the future and what the next couple of years brings. I think Singapore did a similar thing maybe 20 years ago with the NRF scheme. They funded several funds to really kickstart the ecosystem in Singapore. And many of those, in fact, I want to say all of those funds have become mega funds today at the likes of Vertexes and so on. So they have to seed early stage VC less because the ecosystem is already so robust. And hopefully this is what Malaysian government is doing, along with all the other initiatives that they announced that day. Sorry, if we have time, I also want to add on to the ESG point. I think although MVP doesn't label ourselves an impact investor, we like to think that we are responsible investors. And I think for every investment that we make, obviously first we have an exclusion list, but if you are not investing in companies that can improve lives and improve the planet, I mean, we invest in Southeast Asia and India, that's like 25% of the global population. We have to be touching lives. And there is so much to do in Southeast Asia and India, like affordable healthcare, financial inclusion. There's basic things that need to be addressed. And I think we should be thinking very deeply about this.
Okay, thank you. So now we have already heard about the trend and the view of the VC and also the Malaysia government initiative. So what do you see in the major gap between the startup and the VC with regards to their pre-seed and seed investment? So pick up from BFM interview, they stated that 42% of the startup fail because they do not meet the market needs. So what are your take on this? To Ms. Tanuja again.
I mean, I'm actually surprised that number is not higher than 42%. Obviously, yes. I mean, if you don't find product market fit, then that's the death of a company. And it takes a long time to get there. I mean, there's a famous saying, right? Most overnight successes took many, many, many years to get there. But if you're asking me what I think the mismatches between founders and VCs, even when you're talking about an early stage company, I actually think it's two things. One is having some sort of exit strategy. And I know founders are at the beginning of their journey. They have bias about what they can create, and I think that kind of naive optimism is necessary when you're a founder because it's really, really hard. Also, founders are probably fighting fires every single day, so they are focusing on the today and not 5, 6, 10, 20 years from now. But the truth is that all funds are 10 years long. A fund life is 10 years. And we make an investment today, we have to exit our stake in 5, 7 years or so to return capital to our LPs. And so whenever I'm evaluating a company, on top of everything that you read about, team, market size, et cetera, I'm also thinking about how can we exit our stake in this company? How long will it take us to do that? What does this company need to be before we do that? Who can we exit this to? Can we sell this to a bigger incoming fund, a PE, or does it require an M&A play? And I always think about our exit strategy as a fund, even if I'm investing into a pre-seed seed company. Founders that are able to help me with that process is it's definitely a plus point. I had something else, but maybe I'll stop because I'll let the others speak.
Yeah, so we let Mr. Saito, you want to chip in?
I mean, the gap between VC and founders, right? I think nowadays the gap is becoming less and less comparing with actually 10 years ago. But yeah, still a lot of founder presented to us, several projects. Hey, Koichi, I have this project, what do you think? But then I have another project, and what do you think? So I have 5 cards, so you can pick up. Sometimes this happens, and this is a red flag. We're not going to invest in that. So, and some of the founder, they never invested their own money into the company. So we put like 1,000 ringgit, and then I come to you and fundraise, and this it doesn't work for us as well. And these kind of founder easy walk away whenever they found the difficulty. And what else? Some of the founder who is trying to start their startups, which is completely different from their background, I need to ask why, right? Okay, I used to work for restaurant, whatever, but then now I'm setting up the lending company, a fintech company. So it looks like, sounds like completely different. But then the story, connected between restaurant and your fintech business, if its story is quite convincing, if he or she can leverage their the networks from restaurant to the new fintech company, that makes sense. So I see the story, but otherwise it's quite difficult to invest in. So I see this kind of gap a lot in the pre-seed and seed stage. Yep.
Okay, thank you. So our final question. So all of you have invested in successful startup, and either they have multiplied or you have exited. So what advice do you have for our audience today? So for Miss Yuan.
Yeah, I wouldn't say any successful story. I think it's too early to tell yet. But have been talking to hundreds, if not thousands, of startup founders. I do think we have something to, take away or lessons learned to share. I think number one, very important question is trying to tackle a real problem. To try to be very clear, what is the pain point you are trying to solve. And if you want to raise from the VC money, you need to think about whether your TAM is big enough, whether this is a mass market problem, whether the pain point is painful enough that people want to pay. Because oftentimes what we are seeing is when I think a lot of founders when they think of raising money, they immediately think of VC. But actually raising from VC is very different because once you raise money from VC, you need to expect to deliver like 10 times, 15 times return rather than doing maybe stable business generating stable cash or growing like 10% each year. So I think that's a distinguish you need to make very clear at the very beginning. And secondly, we often see is sometimes when founders think of a problem or pain point, it's something which is his problem. It's not most of the people's problem. So end up, we also call it product market fit. So end up when they launch the product, there are not that many clients who buy in the idea or solution. And also what I mentioned is whether this problem is painful enough because a lot of things is actually nice to have, it's not must have. So when they launch the product, if it's free, many people happily use that. But once they started to charge, nobody wants to continue. So that's another common issues we are facing. So the second piece of advice is related to the current funding environment. I think all of us, we won't deny it's a tough environment because of the overall high interest rates. I think unfortunately, it's a buyer's market. So number one, investors are being more disciplined in terms of investing. And number two is I think all of the investors are more cautious. They are more patient in terms of investment. So previously, maybe they talk to the founder, they can make the decision within 1 or 2 months. Or sometimes back to 2020, 2021, I think it also happens that after talking to the investor within maybe 1 day, 2 days, they are able to give a term sheet, which will be not going to happen very often nowadays. So I think nowadays investors have the luxury to observe for, let's say, 3 to 6 months. For example, like us, what we oftentimes do is we talk to the investors, talk to the founders. They give me their projection. Let's say, our next milestone in the next 4 to 6 months. So what I will do is I will keep track with them. And if they are able to deliver, okay, that's good. We're going to give you a term sheet. But if you miss the milestone, maybe I will have to wait longer or observe further. So with this environment, the implication for the founder is often keep an open dialogue with investor. You have to start raising or have the conversation with the investors when you do not need the money. I understand, talking to investor could be very painful because it takes up a lot of time. So a lot of founders prefer to raise money at one go. They will be like, okay, from July I started to raise and I will try to close within 2 months. But before that, I don't want to talk to any investors. I think my advice will be try not to do that in the current environment. You should have an open dialogue. Maybe not try to allocate too much time, but maybe if you're not actively fundraising, you can definitely spare 1 to 2 hours every week or every other week to talk to at least one investor, just to learn about what's their appetites, what's their preference, what's their feedback, and also, just trying to keep them updated of your current progress. So once you have the regular catch up with these guys, I think when the time you really have to raise the money, it's going to be much easier because they've known you for a long time and they've been observing you for a long time. So yeah, that will be my little advice.
Thank you. How about Chris?
I'm just going to make it more light-hearted. I akin to every startup that so for TRIVE, we are lead investors. We have shareholder activism. We spend a lot of time literally in the boardrooms, in the offices of all our different startups. I akin our relationship like a happy marriage that I want a happy divorce at the end of 5 years. And in the first place, before you do that, it's exactly like dating. You got to spend some time to know each other. You got to see each other's DNA. And usually the question I always ask, other than money, which I have very little of, what other value add do you want from me? And the whole thing that over the last few years, we had the COVID period. I sat on 5 boards. There was that horrible season, I think November 2-3 years ago, where FTX collapsed, the economy collapsed. 5 startup boards called me, and I had to go through 4 hours for each of them, and I couldn't remember who was losing money, who was actually running out of cash. But to me, that was what the VC should be doing. The VC doesn't just give you the money. The VC has to be aligned to grow the company. And thank God, most of them have gone out of it, and they are all fundraising. They're all turned profitable. I'm sitting on boards that are companies that are all valued at 100 million to as high as 300 million valuation in US dollars. And I think the other advice I need to tell startup founders, you got to be a swindler at heart. Okay, I'm just going to give you just one story. There was this guy, he's selling water solutions. He said, my story is I went to Cambodia, I saw this poor boy drinking water and my heart broke. And he gave me this swilling sob story within the next 20 minutes. I just wanted to give him money in my wallet, which was only just $50. But, I think it's just something to encourage you guys that what's your story at the end of the day? You got to swindle the investors. The investors are all about story. When you build an IPO, when you exit, it's all about a story. And you look at all the unicorns now, what was the bullshit story that they came up with? And they got enough people to put until it's too big to fail. Okay, so I won't mince my words. You're passing the hot potato. You're just keeping on that way. And the idea is that at the end of the day, can you convince somebody to believe that story with you? Okay, that's it.
Okay, thank you. MC, do we still have more time? Okay, we open the question. You want to? Sorry, yeah. So we open the floor for any questions.
Hello. Hi VC, I'm Farah and I'm also a startup founder. I founded a health technology company focusing on nutrition where our goal is to improve chronic illnesses. Yeah. So for the past 3 years, we built this company where we started with our flagship product. Majorly is consultation, so people think that it's no value, but what we really do is we listen to clients' story and what's their pain point. Yeah, so we also get our first pre-seed investment from a prospect client who turned to become investor, who turned to become a client, which then we help to avoid him eating medication. This investor decided to invest in diet ideas because during that time we were raising a diabetic campaign. Is our pledge. Malaysia free of diabetes is our pledge. Yeah, so based on the 3 years data that we have, since last week we are building our another platform which is Healthy Food Around Me. Healthy Food Around Me is an advertising platform for all the healthy food products where we help to sell and improve their sales performance through the leads that we have built for the past 3 years, where this is a very high quality lead. So now we are casually looking for investor, but for the VC, we still also in a dating phase. We want to know, is it VC is the right path for us, or is it VC loves us, or what? Okay. So my question is, so when VC come to invest in a startup, right, do you expect that founder to keep on fundraising, or even though they are already profitable, or what's your appetite on this? Thank you.
But my first question is, do you really want to raise from BCs in this case? So again, right, once BC will be involved, right? So let's say, okay, successfully you raise, okay, $1 million at $7 million valuation. Okay, you are happy in this case, but the BC is going to expect you, right, to be exit at maybe $20 million, $30 million. If some other acquirer come to you at $10 million, maybe the BC will reject, or sort of stuff is happened. So also your client, right, became the BC. I'm sorry, investor, right? Investor. So do they agree to raise from BCs as well? Okay, okay.
The reason why he invested in direct ideas is because actually he buys the stories of how food can become a medication, because he doesn't want his kids to be in this situation.
Okay, so I don't know, maybe it's depending on the BC. For us, let's say, once we put money in, and then if you, let's say, exit, right, 3x, 4x, and then I'm fine. I mean, I'm happy. You don't have to keep raising. But once you get at another funding, at the next financing, then you have to keep going for the next investor, not for us. So something like that. So once you invite a new investor, these guys expect like 3 to 4x higher valuation. So you have to think about it. Yeah. Sorry, maybe, yeah. You want?
It's okay. I think there are
Okay, my name is Darwish, been an entrepreneur for 20 years now, have 9 startups, 1 exit, and hopefully our next exit is happening hopefully this year. I have mentored around 250 startups with government incubators, 2 in the Middle East, and I've been part of Malaysia Digital Expert and GRC also. My question is from the other side of the world. I've tired being an entrepreneur 20 years now. I think I've done the success I need. So my question is, if I want to start hopping into the VC career, like helping VCs choosing the right startups, as a tech entrepreneur for 20 years, where should I start? If that's a question. Yeah, thank you.
So this one is actually, it becomes a natural evolution of companies that exit. They will actually go and join the VCs that back them naturally. And why would not the VC want to have your talents? There are these 2 elements of venture capital. It has human and financial. They need operator VCs, and you are considered an operator VC. You have the entrepreneurial talent. It's very highly key in the early stages before A rounds, and then from A rounds onwards is when the financial VC starts to get into play. And my answer to you is go back to all your investors and say, hey, I gave you money. I made some money. I'm going to give you a little bit. Make me your general partner. And straight up, there is nothing to argue. And those VCs say no are stupid fools. That's all I can just say. Yeah? Okay, and one more question.
I will stick to one last question, right?
Hi, sorry. May I ask 2 questions? First of all, do VCs prefer simple, particularly when it comes to AI solutions, simple solutions. For example, one quite successful one I saw used WhatsApp to provide, got YC Combinator investment for doing some very trivial stuff, actually, providing healthcare advice. Would VCs prefer that over complex complex systems such as developing software, self-growth agents, that kind of thing? And second one, just to Yuan. I'm seeing some amazing models coming out of China in the AI world. And I don't think the Western world has quite recognized the power in software development. Coming to the second point there. Maybe language at the moment is a little bit hard, but Chinese developers are all using Python, Java, C++, all those same coding languages. So I see some real potential advantage in Chinese LLMs that are coming out soon. And do you see that helping the wider world? Yeah.
Okay, let me address the first question. So whenever people ask me whether VC prefers this or prefers that, it's actually difficult to answer because I think investment is a very subjective thing. So that's why different VCs will invest in different startup. So it's very difficult to try to categorize whether VC prefer this over that. And to your question, you are mentioning whether VCs prefer simple solution or complex solution. Again, I think it's very difficult to define what do you mean by simple, what do you mean by complex. But overall, I think my answer to that is I'm going to use what Sam Altman's sharing recently. So he mentioned is a lot of startups right now are trying to build something given the assumption that GPT-4 is not good enough. So they are trying to make like small incrementals, but this can be somehow very risky because you never know what GPT-5, GPT-6 is going to be. So every time you see an upgrade of GPT-4, ChatGPT or other LLM, you will see overnight it will wipe off a lot of startups. So I guess for startup perspective, you should try to think about what are your key value proposition. Your key value proposition means that it's probably not going to be replaced that easy by an upgrade of GPT overnight. For example, if you have some specific data which maybe a general LLM is not going to be able to use to train, that could be an advantage. So you can be focusing on very niche vertical, which you will have the clients, the data, the feedback to create some add-on or solutions for a very specific group of customers. That would be question one. Question two, I'm not entirely get it, but you mentioned the China LLM. So in fact, yes, there are a lot of. It's actually a very hot topic last year. For a lot of China VCs to invest in China LLM. But that has a very special context because ChatGPT is not being able to use in China. That's why, for an obvious reason, China has an opportunity to develop LLM. So I also talked to some of other Southeast Asian startups to try to build an LLM in Bahasa or other language, which I think might not be that relevant. But in China, yes, simply because ChatGPT can't be used in China. So that would be my answer.
Wilson, you can wrap up the session.
Okay, thank you. So thank you very much for your sharing on the future trend. Yep, I pass the mic back to MC.
All right, thank you, panelists, for the insightful session. Everyone, please give them another round of applause. With the mic.